day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 22nd of October, 2019. Interesting day. Boris Johnson had a little bit of a winner when, in theory, Parliament approved his plan. Then the reality set in. They didn't like his timetable for getting it done, which is parlance, for it may never get done. So the British pound, wild day, trading up and down about 40-point range. It was a little bit of everywhere, you could say, but it finished lower. Stock market still feeling some pain here, although the Russell managed to eke out a 10-point gain. You saw the NASDAQ get hit, the S&P get hit with the Dow. So big breaks there. We have a rally going on in the metals, but they didn't close here. You close closer to 1750 in the silver. Gold right in this area, as I recall it. Copper in that area too. Then we get over to the bonds and notes, which are a little bit of a rally taking place. And you know, we're just days away now, 2 days away from the ECB meeting where we get their monetary policy, and then next week we get ours. You know, Halloween's coming. Get ready for that spook time. As we look at the S&P 500 index, the market for the week is up 5 points. You can see how it's had a nice bounce. But as I was on Fox TV today talking about it, we haven't been able to get through these highs, even though we hang around at them. We just haven't been able to push through. And you can't get away from the fact that so far you got, on a closing basis, lower highs and higher lows. Market's sort of caught in the middle of no man's land. If we take a look at where we're at, I know I've pointed out almost every day that the market's into this resistance area and the one from back here, and we keep coming up there and sort of rolling over. Now, there's another pattern that's here very clear to me. We have a shoulder, an inverted head, and possibly another shoulder. And if I could pick it up with the movement of, if you will, graphics, it would be great because I would pick it way up and show you where that count could go. But we're not there yet. This market is just sort of looking at all this, and we need to see what it's going to develop. In terms of swing lines, and what swing lines do very simply is they will tell you if the market is trending or not in terms of the definition: higher highs, higher lows for an uptrend, lower highs, lower lows for a downtrend, or no trend made up in some fashion of a higher high and a lower low. So you're not getting the stepping ladder effect down or up. And that's what you have right now. You have that no trend impact. You got a lower low and a higher high in a market that's sort of stalled out right there. As we come over and we take a look at moving averages to get down to the key moving averages, and there's none above the market, well, you'd have to break through these lows even further. Nothing wrong with that since you're not trending, and I'd see the support back in here of 29.56 to 29.46, about 50 points lower. In terms of resistance, well, I've pointed out this area here for you, and that sort of ties in with the upper Bollinger Band at this point. And when I put momentum on the chart, if momentum leads price, this pullback is a false pullback. In other words, the market may well still, until it loses this situation, try to move higher. Now, what is this situation? If you'll notice, both numbers are over 80. Both numbers were over 80 yesterday, and both numbers over it the day before. So you've got at least 3 in a row. The day before that, it wasn't. When the market has 3 days in a row, I look to see on that third day, where did the market close? And unfortunately for me, the market closed near the day's low, which means when we reopen, the impact on that has to be looked at. Do you keep the embedded reading? And at what point does it get lost? I can't tell you the point it gets lost, but as long as it stays in place, I say that the pros are still buying these breaks. I'm going to give you another thing that sort of showed up today. For those of you that get my twice daily updates, I wrote last night, be aware of what? Tuesday reversals. You got your Tuesday reversal in the market. You got the same thing in the NASDAQ now with lower highs, lower low. I could argue that that is the pattern now. That would put both arrows down. So I would take this one, put it up here. But because you're over the 18-day average, the bias is up, and you still have the embedded reading. Now you close right on the lows of the day. When we reopen, excuse me, the odds favor you're going to lose that embedded reading, which if it stays lost, puts into play support between the 77.90 and 77.54 zone. What would capture the shorts right here and kick the market potentially even higher? Taking out today's highs, because that would be a bear trap. I don't see that occurring, but it could. In the Dow, we still have the pattern of higher lows, higher highs. Now, admittedly, we're backing off, and unlike the other indices, we're not embedded. You're overbought. Overbought if the market takes out this low that we made yesterday, and that low was 26,701. If that's taken out, you'll create lower high, lower low pattern. You may come into that zone to challenge that support level. Excuse me. I was writing yesterday, too, about the Russell and talking about it. Because what the Russell has done is it has worked methodically to get through all the major moving averages. I am talking the 18, I am talking the 100, the 200. Then the next tackle for it was the upper Bollinger Band, which it got up to yesterday, challenged it again today, and while it closed higher, it's certainly offering resistance. The market is very overbought. Support levels start at the 200-day average down to the 100. What you don't want to see taken out is this 15-24-10. If that were taken out, you would break the pattern of higher highs, higher lows. It would not start a bear pattern because you'd have a higher high and a lower low at that point. But it's important to pay attention to that. In the VIX, when I was on Fox TV today talking about the markets, I noticed that my good friends that I was on with, they're talking of buying the VIX here for insurance. And I said, you know, it got to be different. First off, it's in an uptrend. So I can't disagree with that, but it's also under the 18-day average. So the bias is down and it has an embedded reading. I don't know that it needs to be bought right here. I like to come into markets when they're trending. Just the idea, well, and I know what they were saying, at the 1300 level, well, it might offer support. Well, first off, I don't know that it's going to get to the 1300 level. And does it really matter if you're buying insurance? You're buying insurance, if that's what you're doing. I don't know that it's needed or not. In the T-bond market, I'm looking for a zone here where the market finds its support and gets a pop in front of the FOMC meeting next week. It's that simple. You've had a beautiful decline in the market. You're into key support of the 100-day average of closes, the lower Bollinger Band. You didn't quite get to those numbers. Today's low was 159 and 2/32. The 100-day average 158.24. The trend is still down, but you are in oversold territory. In the 10-year note, you're in oversold territory, trend down. Again, I'm watching the 100-day down to the lower Bollinger Band for support. The 100-day came in at 129.13. The day's low was 129.15. I see support in there just for the reason that you have the FOMC meeting. You've got the European Central Bank on this Thursday. I think pros take some money off the table in front of those, although, in all honesty, Mario Draghi's probably not going to do very much. He's turning over the helm on October 31st to Ms. Lagarde. She will take over what's going to happen. He's done a good job, and he's handed her the ship, and that's what this meeting's all going to be about. It's going to be about telling him what a good job he did, and he did. You've got lower highs, lower lows in TLT. The market coming down, support between 138.02, 137.53. You have a market that is it embedding? Well, both numbers were under 20 today on the close, both under 20 the day before and the day before. So the answer is yes, you've embedded. That means two things. First, on the rallies, the pros sell. Second, if the red line closes over 20, look for the market to make a run for the 18-day average of closes. So I'm looking at these, and I'm leery of the interest rate futures right here simply because of the ECB and the FOMC meeting. In the dollar index, I'll stay behind what I teach. The first challenge of a 100-day average and a lower Bollinger Band is often, I cannot say always because it wouldn't be accurate, but often where the market looks for support. That's what we're doing. In addition, both numbers are under 20 in the slow stochastic. They were under 20 yesterday. They were under 20 back here, and they were under, well, they were last Thursday, not. But you have 3 days in a row. As long as you have that, this vacuum between here and the 18-day average, I look for the pros to step in and be fairly aggressive on their selling there unless they lose the embedded reading where the red line closes over 20. And it'll be something of a flip-flop on the euro. Notice how the market yesterday started faltering at this 18-day average of closes. You finished out at 111.88, and 111.96 was that upper Bollinger Band. So you had spiked up, you started coming back, and now you're moving like this. Now, it's still an embedded reading, but you've got to see tonight if it stays embedded. You're near the lows of the day. On a big break in that market, I'd be a little cautious. British pound, still an embedded reading. Market had a failure today in the sense that it didn't get what it wanted on Brexit. I don't know what the European Union will do. They'll probably give them an extension to January. Let's face it, if you're the European Union, rather than have a real bad Brexit, you might as well get a good one, give them all the time they want. What does it cost you? Not very much. That's the point that I'm making. They're still negotiating how much the UK is going to pay them to leave, if they should leave, and it's just been a mess. So they have nothing to lose by probably granting a lot of time, maybe to the January 31st time frame. Higher lows, higher highs, pulling back on this market. I don't like playing it for the reason that we talked. You have no control over all the craziness that's going on there. In the Japanese yen, will we get some more short covering is the question of the day. We could. You still have the embedded reading, so I'm viewing this as sellers looking to come into the market and hit the market as long as you keep the embedded reading. Still looking for lows that might come back and challenge those lows. Lose the embedded reading, then I'll look for the 18-day average of closes. In Bitcoin, you've just gone sideways, and I think I've been pointing out to you every day, look at how this Bollinger Band is narrowed in. From here, big moves occur. The longer it tracks like that, the bigger the move's going to happen, in my opinion. Then we get to Brent versus WTI crude, and while this differential made a challenge recently of the $6, now it's back to 526, which means Brent's losing the WTI in price. And when we come over to the this BZZ, which is the Brent, we can see that the market has the higher lows, but now it's got lower highs. No trend is the first thing. I see a market churning against the 18-day average. I see stiff resistance at the combination of the 100-day and the upper Bollinger Band. The question is, will the legacy of this market, and it is at play, of higher lows and then the higher high here. You never came down and made the lower low. So with the bias up, the market's 59.46 over that number. It could make the run there. It's one of those iffy calls. I don't like when markets have lower highs, higher lows. In WTI crude, we got up today to 54.81. This last high here was 54, if we take a look together here, 54.69. So you're keeping the pattern of higher lows, higher highs, possible resistance, upper Bollinger Band. In fact, not possible, strong resistance, 55.22 to 40. We'll see if it acts that way. You're getting overbought coming into that number. Gasoline's got a lower low, higher high. That's not a trend. I look for resistance at 160.65, the upper Bollinger Band. And in nat gas, I would not be surprised on rallies if you get into this range that the pros are sellers. Even if you had a straight up move for whatever reason, I see an awful lot of resistance at the combination of the 100-day average and the upper Bollinger Band. I think the bears are controlling this with lower highs, lower lows, momentum still pointing down. You know, as I told you the other day, one of the things I had done is I had written my silver report. So instead of showing you an ad and everything for it, I'm just going to leave it at this point. All you need to do if you want to take a look at it is go to our website at www.iraepstein.com under the word research. The silver ads really covers a lot of ground this time for you. You've got your seasonal charts, quarterly, weekly, monthly, daily. I show everything that I can on it, and today's numbers were pretty important the way the market acted. You can get there by clicking here. If you're watching me on YouTube, it'll take you right there. I'm Ira. You have a good day, and I'll see you all tomorrow.